Assalamualaikum, saya Mustafa. My name is Duribatis Riyadi. I am a leader in this group and we are from group 6 will be presenting about Texaco Oil Company. We'll pass to Nazifa for background of the company.
Assalamualaikum and hello to everyone. My name is Nazifa Batrisha binti Nazib and my metric number is UDE 210202. Today I will present an introduction regarding our assignment. In this assignment, we will study and discuss about internal control and fraud in the company. First of all, what is meant by internal control and fraud? Internal control are accounting and auditing process used in a company finance department that ensure the integrity of financial reporting and regulatory compliance, while fraud is intentional misstatement or omission of amount disclosed in financial statement. After making a discussion, we all choose Texaco as the company to investigate regarding internal control and fraud. In the latter half of the 20th century, Texaco is also known as a Texas company from 1902 to 1959, was a former oil company that headquarters in the United States. Their mission is to success in the 21st century by becoming a unique, a growing, and a financially successful energy company that is driven by technological innovations. Texaco company history. Texaco was established when oil was discovered at Spindletop in 1902. Joseph S. Cullinan, a former employer of Standard Oil, and Aaron Scarlett, a New York investment manager, established the Texas Oil Company in Beaumont, Texas. The original plan for Texaco was to purchase crude oil in Texas, refine and then resell it to Standard Oil Company interests in the North at a profit. However, very quickly after that, they began to produce their own oil in the extreme large Spindletop field. After reorganizing in 1902 as the Texas Company, the company began operating tankers out of New York by 1910. It helped build its first refinery outside of Texas in Illinois by 1911. It was the first business to market in the continuous 48 states in 1928, and it started doing business in Canada, Colombia, and Venezuela in 1930s. It shared ownership of projects in the Middle East and Indonesia with Standard Oil of California, SOCAL, including the Caltech group of companies in Bahrain, the Saudi Arabian American Oil Company Aramco, as well as holding companies in Java and Sumatra. Texaco's main activity is extracting, processing, marketing, and transporting crude oil and natural gas. In 2001, Chevron Corporation bought Texaco. Following that, Chevron replaced Clean System 3 in 2005 with Texaco Petrol combined with Tenron, an additive created by Chevron. This has made Texaco brand famous in the United States, Latin America, and West Africa. It also has presence in Europe. For example, with around 858 service stations under Texaco brand in the UK, it is a well-known retail brand there. That's all for me. I will pass the presentation to the next person.
Salam sejahtera and hi sir. So in this video, I'm going to present about summarization of the company that we choose. So our group chose Texaco Company Oil. In the case of Chevron CEO ordered to testify in fraud case against Ecuadorians. In this case, the judge determined on Tuesday that the chief executive of CEO Chevron Corp must give testimony in the U.S. oil company's fraud case against Ecuadorians who are trying to collect on a $19 billion judgment against Chevron for a rainforest pollution. Moreover, a spokesperson for the Ecuadorians said that the John Watson, who became CEO of Chevron in 2010 and helped integrate Texaco after Chevron's 2001 purchase of the company gave it ownership of the long-running Ecuador case, could keep his deposition before an end of May deadline for evidence gathering ahead of the October fraud trial in New York. But Chevron is defending itself against false accusation that is blamed for alleged environmental and social harms in Ecuador's Amazon region. A court in Lago Agrio, Ecuador issued a $18 billion judgment against Chevron in February 2011, which is which was later reduced to 9.5 billion for air contamination caused by crude oil production in the region. The United States District Court for the Southern District of New York ruled on March 4, 2014 that the 9.5 billion equatorial judgment was the result of fraud and racketeering activity and rendering it enforceable. The nearly 500-page ruling concludes that Steven Donziger, the principal American attorney involved in the endocrine lawsuit against the corporation, violated the Federal Racketeering Influence and Corrupt Organization Act, which is RICO, engaging in extortion, money laundering, wire fraud, violation of the Foreign Corrupt Practices Act, witness tampering, and obstruction of justice to obtain the Ecuadorian judgment and cover up the crimes of himself and his associates. The decision forbids Donziger and his associates from trying to have the Ecuadorian judgment upheld in U.S. as well as from making money of their illegal activities. Chevron filed a civil lawsuit in a federal court in the United States under the Racketeering Influence and Corrupt Organization Act (RICO) against Steven Donziger, the American lawyer behind the Ecuador lawsuit, and his associates to prove that the judgment was obtained through fraud. The RICO complaint was filed in February 2011 to hold the plaintiffs' representatives accountable for the Lago Agrio litigations, frauds, extortion, and other misconduct. Subsequently, there was also a testimony from former plaintiffs allies who provided first-hand accounts of corruption initially. The environmental consensus that the plaintiffs' key environmental consensus status consulting provide sworn testimony disavowing their works for the plaintiff's lawyers and affirming that the plaintiff claim against Chevron lacks scientific merit. Next, funders which is not Burford Capital, one of the plaintiff's largest financial bankers, provide sworn testimony documenting fraud and other misconduct on the part of the lawyers in order to secure funding. Lastly, former judge that according to a former Ecuadorian judge who presided of the case, the judge who issued the ruling was promised a $500,000 bribe by the plaintiff's lawyer in exchange of ghostwriting the judgment in their favor. In October 2013, the case went to trial. Chevron called 24 witnesses, offered deposition testimony from 21 others, and introduced over 3,000 exhibits into evidence during the trial. On August 8, 2016, the United States Court of Appeals for the Second Circuit unanimously upheld this decision. According to the appeals court, Donziger and his team engaged in a parade of corrupt actions, including coercion, fraud, and bribery. So that's all from me. So I pass it out to next person to present about their part. Thank you very much.
Hello everyone, my name is Cheng Yin and my metric number is UDE210141. Today, for my part is the lacking internal control. Internal control are the policy, rules, and the procedure established by a company or organization to guarantee the accuracy of financial and accounting data, promote responsibility, and guard against fraud by improving the accuracy and timeliness of financial reporting. This control can help increase operational efficiency. First, in the internal control is the company financial and accounting report must be supported by authentic paper, must often invoice, purchase, order, and some receipt. If these documents are missing, the statistics in such reports cannot be trusted. If the original document or paperwork cannot be found, it becomes challenging to confirm the accuracy of the data in the reports. Second is a risk assessment. A risk assessment is required for every internal control procedure. Identify the failure that will most likely have an impact on the business. Risks are typically in row and column to represent a layout of the issue and its resolution in the risk assessment tables, which are the most common format.
Assalamualaikum to Mustafa. My name is Duremiti Suryadi and I'm a leader in this group and my matrix number is UDE 210098. Today, I'm going to present about internal control system problem in Texaco company. What we can find about Texaco company internal control system problem is the separation of duties. In organizations, the performance of critical function is usually divided between different employees. In businesses with limited human resources, it is common for one employee to be solely responsible for completing multiple tasks in a critical process. However, failure to properly segregate tasks can result in a greater risk of error or fraud. In general, assigning different people responsible for authorizing transactions, recording transactions, maintaining custody of related assets, and reconciling accounts provide more effective internal control. Each employee should have specific job responsibilities. Reassignment of certain tasks in the process to other appropriate individuals can help reduce risk in many cases. In addition, operational security focuses on monitoring operations and implementing risk management in day-to-day business operations. Problems in operational control are caused by human factors. Operational factors becomes less effective due to the employees responsible for operations not following established standards and policies. This incident response causes time-sensitive operational control. Timely intervention is most effective in preventing or reducing violations. The longer the interval between the onset of security event and the interventions, the less the incident response. Moreover, architecture creates a unified system for documenting and addressing risk in the information technology environment. Architectural control problems involve changes to hardware or software configurations. When changes are made and not properly monitored or approved, they can break parts of the security architecture. Any change that affects an element of an organization's security architecture is a potential weakness of the architecture's controls. Besides, it is a control system. Technical security controls include both hardware and software. Problems in a technical control are caused by technological changes and maintenance or configuration failures. If the hardware or software of a corporation information system is breached, this is a technicality. Lastly, policies and procedures, which is effective in helping align business objectives and helping to establish good operating procedures, are one of the least used control tools. Even if business processes are not complicated and well known by management and employees, there is a value in establishing written policies and procedures. While every business is different, here are common processes that are important to define and document. Sales and accounts receivable, purchases and accounts payable, and closing and financial statement reporting. That's all for me, thank you. I will pass to Ayuni for recommendations.
Hi, my name is Nur Ayuni Syamin bintu Barani and my matric number UDE 21083. I will present about recommendation of the problems. First recommendation of the problem is catalog internal control procedures. Documenting financial transaction, procurement, process, product design project, product testing, and internal audits. Before it can examine procedures to find problem, it's required a full inventory of existing processes, determine which part of the company are at higher risk than others, evaluate control design including documentation, training, segregation of duties, and feedback loops. Next, conduct a risk assessment. All internal control procedures must undergo a risk assessment. Identify the value most likely to affect the company. Risk assessment is usually done in tabular form with risk arranged in rows and columns, representing problem and solution logs. When investigating each risk, add columns that show where the problem is. why the control are indicated, who is responsible for the specific process, who identify the issue, what the solution is, and when the person responsible took action. Moreover, conduct an internal audit. Internal audit include review of accounts payable data, including stocks, asset, and cash reconciliation. Cash reconciliation involves ensuring that the organization cash can be fully accounted for, taking into account income and expenses. When checking accounts payable, it must verify that all payments are being sent to the correct person or company. Must then cross-reference this payment with all financial statements, both internal and external. Besides, train and educate staff. As internal controls continue to evolve, it is important to educate employees on the latest internal control procedures and methods. Inform employees of any changes and their impact on their daily routine. Lack of employee knowledge and training is one of the main causes of internal control failure. By training employees and involving them in the process, they can assist in identifying and correcting problems controls. Lastly, examine department reports. By ensuring key business metrics follow expected trends. Unwanted metric trends such as revenue, profitability, or customer attrition may be related to internal control failure. Combine reports from all departments to get an overall picture of the organization. In addition, encourage department or business units to report on control and control issue independently. Do not take this report at face value. Assess each department's ability to accurately assess the current status of their control and validate their finding. That's all from me. Thank you.
My name is Sherfan Sabit Sezwa and my matrix number is UD120116. So I'm going to talk about the fraud triangle that we can relate back to the case. So the first one is opportunity, which is Texaco have a weak internal control in the company, and internal controls are processes and procedures implemented to ensure the integrity of accounting and financial statements, financial information. And weak internal control, such as poor separation of duties, lack of supervision, and poor documentation of processes, give rise to opportunities for fraud. And for instance, Texaco had a problem in separations of duties. They were failing to properly segregate tasks, which leading to a greater risk of error or fraud. And it also led to an inaccurate financial statement. Other than that, Texaco having an inadequate accounting of policies and procedures, which is accounting policies refer to how items on the financial statements are recorded. And poor accounting policies may provide an opportunity for employees to manipulate numbers. And Texaco is lack of risk assessment that is required for the procedure. And management and managers responsible for each department should perform a risk assessment by examining the organization exposure to fraud risk events. Because changes in internal and external environment are certain, the assessment should be refreshed regularly to mitigate risk and to an acceptable level. So, second one is incentive. As in the Texaco fraud case, there is an element of personal incentives, as in this case, Steven Donziger, the principal American attorney involved in the Ecuadorian lawsuit against the cooperation, violated the Federal Racketeer Influence and Corrupt Organizations Act when he tries to cover up the crimes of himself and his associates. Plus the poor tone at the top. Tone at the top refers to upper management and the board of directors' commitment to being ethical, showing integrity and being honest. And a poor tone at the top results in a company that is more susceptible to fraud. And we can see this when the fraud happened in judgment involved the principal American attorney. And the third one is rationalization, which is refers to an individual justification for committing fraud. And one of the reasons they commit this fraud is to secure funding, as it mentions in the funder's testimony, which is Burford Capital, one of the plaintiff's largest financial backers, for the fraud and misconduct. And lastly, one of the ways is to get an easy money just like when the former Ecuadorian judge was promised $500,000 bribe in exchange for ghostwriting the judgment in their favor, which has been said in the given testimony. And by that logic, his team engaged in a parade of corrupt actions, including fraud and bribery, according to the appeals court. And that's all from me. I'm going to pass to the next person.
My name is Nurul Nabila binti Syamsuddin and my message number is UDE 210106. I will present about the conclusion. So, the majority of frauds or error are difficult to detect if the company does not conduct an audit. This need to be refined because this fraud or error will give a big impact on the company, such as direct financial loss and damage to the company's reputation. It may cause the company to lose its ability to attract and retain business partners, customers, and employees. In addition, it can also cause company to breach banking agreements or expose them to regulatory costs, legal fines, and sanctions. Then it can threaten the company's ability to maintain its competitive advantage. Unfortunately, most companies cannot implement effective anti-fraud controls until after they have been burned by their absence. The conclusion is that every company must carry out a risk assessment for every procedure done before, during, and after they produce a product. This is because the failure to assess will affect the business. For the instance of the U.S. oil company's fraud case against an Ecuadorian trying to collect a 16 billion judgment against Chevron for rainforest pollution. Therefore, each possible risk should be noted in rows and columns to represent the lookout of the issue and its solution in the risk assessment table, which is the most common format. This is due to the risk assessment table can be used as evidence to defend oneself from false accusation. Last but not least, internal control is the company's financial and accounting reports must be supported by authentic papers, which are most often invoice, purchase order, and some receipt to be used as evidence. That's all from me. Thank you.